indices. Like there's a whole suite of products that are yet to come. Now that this thing is trading a few $billion a day in flow, you can start building these complex derivatives on top of the ETF. So I think it's only going to increase the volatility of Bitcoin, and there's going to be more funds flowing into it, at least in this particular juncture of the cycle.
Hey guys, welcome back to Everyday Finance. In this video, Arthur Hayes discusses Bitcoin and crypto. According to Arthur Hayes, it seems to have struck a chord given the current circumstances. Many people are feeling quite anxious about these significant developments, although not everyone shares the same sentiment. Investors are deeply concerned about these significant deficits. There has been a noticeable inflation issue since the onset of the COVID-19 pandemic. It seems to be affecting the general population. There is a sense of skepticism towards the government due to their alleged dishonesty about vaccines and various other matters. Additionally, in the midst of highly debated presidential elections across the globe, individuals are seeking a change from the norm. In Arthur Hayes' opinion, this explores that narrative, and then the entire financial press is promoting this. So Bitcoin seems to be a solid option for hedging against inflation. And guess what? Arthur Hayes has a recommendation for a great product you can buy over here. Just make sure to pay these guys for it. It's great to have someone who can handle your finances for you. With all the interest aligned, you can now rely on CNBC for daily updates. These are the messages that have been discussed for decades by various individuals, including you and me. It's simply a matter of ensuring that incentives are properly aligned, so it can continue indefinitely, as long as the story remains intact. Arthur Hayes. Not entirely sure what that entails, but it seems like we're simply, when considering how individuals allocate their investments, they typically begin by approaching their HR department to obtain a form and make their selections by checking specific boxes. It's incredibly frustrating, and then suddenly, money begins to flow in from their 401k. Once those allocations are set, it's smooth sailing, and that's the real charm, and lots of things Arthur Hayes discussed, so please watch the video to end. And share this video, and subscribe our channel, Everyday Finance. Thanks.
I mean, I was definitely not expecting it to be this quick, fastest growth in AUM ever for an ETF complex. It's the best performing product in terms of AUM growth for, I guess, probably every single one of those major asset managers. So obviously it's hit a nerve. The timing is right. Everybody's freaking out about these massive, well, not everybody, certain investors are freaking out about these massive deficits. There's this inflation issue ever since COVID. There's a general mistrust of the government after they lied to us about vaccines and all sorts of other things, right? And then you have contentious presidential elections around the world. People want something different. And I think this taps into sort of that narrative. And then you have, the entire TradFi financial press pushing this narrative of, yes, Bitcoin's a good inflation hedge. Guess what? Here, buy this product over here. Pay these guys some money to manage it for you, right? So now all the interests are aligned, and now you have CNBC every day spitting out messages that you and I and others have been talking about for decades, right? So it's just that incentives are aligned, and so it can continue as long as the narrative holds. What does that mean? I don't know, but I think that we're just at the start, right? If you think about how people allocate to these things, they go to their HR department, they get a form, they check some boxes. It's fucking annoying as hell. And then money just starts trickling in from their 401k. So once you've made those allocations, then it's just on autopilot. And that's the beauty and the bad things about passive investing is it's just a continuous stream of cash. Once you get into these very sticky flows of retirement accounts and pension funds and all these sorts of things. And then you're going to start seeing people take this ETF and do some financial engineering around it. Maybe if there's some other listed options, I think there's a covered call, structured product. Then you get the the high net worth sort of groups creating all these structured products, auto callables, range accruals, all these sorts of things that you can start to do once you have this liquid security that everybody can trade, the same things that they do in S&P and KOSPI and HSCI and all these other indices. There's a whole suite of products that are yet to come. now that this thing is trading a few $1 billion a day in flow, you can start building these complex derivatives on top of the ETF. So I think it's only going to increase the volatility of Bitcoin, and there's going to be more funds flowing into it, at least in this particular juncture of the cycle.
The increasing number of passive investors in the traditional stock market worldwide is having a detrimental impact on prices. Exploration. The stocks that are considered highly valued are attributed to their perceived value rather than the quality of the companies themselves. Therefore, being part of the S&P 500 does not necessarily guarantee the superiority of a company. If you're at the top of the market, you'll receive more money due to the way the index is weighted. This will have an impact on your financial situation. In this passive situation, it seems that people simply check the box and the money continues to flow in Bitcoin, and they continue to acquire more Bitcoin as this narrative persists despite their lack of competence. Therefore, Bitcoin remains similar to a financial analyst. One must understand that the value of certain monetary assets depends on their ability to generate returns. In the case of this particular asset, if it remains stagnant, the miners will not receive passive income. Investing in a manner similar to BlackRock, they're convinced that Arthur Hayes will create a financial vehicle where you can invest your money. They may charge you some fees, and it seems like Arthur Hayes doesn't do much else. While it's a successful business, their focus on Bitcoin is indifferent, will not have any significant impact on the progress or hinder the growth of Bitcoin. Let's back to the Arthur Hayes interview.
Of course. I mean, you look at how the percentage of passive investors in the traditional stock market across the world, it's destroying price discovery. The stocks that are highly valued are highly valued, not because they're good companies, right? So if you're in the S&P 500 and you're a top market cap, then you get more money just because of how the index is weighted. And so that's going to happen in this passive situation, right? As people just tick the box and the money keeps flowing into Bitcoin and they keep accumulating more Bitcoin while this narrative holds. They don't do anything, right? So Bitcoin is one of those monetary assets where it has to do something for it to be valuable, because if it doesn't move, then the miners don't get paid. Passive investing, like BlackRock, do fuck all. Their point is, I'm going to create this vehicle. You can put your money in. I'm going to charge you some fees, and I don't do anything else, right? It's a great business, but they don't care one way or the other about Bitcoin. They're not going to do anything, either good or bad, to further or, put at detriment the movement of Bitcoin. And so that's the issue. It's just not going to move. So if it gets too big and there's not this movement, then, we have this whole segment of the market that has no connection to what's actually going on. And that could be an issue if there's some contentious sort of things that need to get approved on the network level. Maybe there's some privacy things, security things, whatever it is. And these passive investors, they're just like, this is not my job. I just sit here and I accumulate assets, right? And so that's, I think, the risk. Are we anywhere close to that? No, but it's Bitcoin, right? The whole point is everyone should be able to buy it for whatever their purposes are. And we hopefully created an economic game such that we still get people to use the asset. And if we don't, then the game is faulty and we have to go back to the drawing board and do something else. I think it's really going to depend on the types of derivatives that take off on Bitcoin, right? So we're seeing in the 0-day options world, obviously in the US, and as you've seen, if you ever traded Kospi in Korea, like once you get the retail into these sort of highly leveraged option strategies, the volatility obviously spikes up, because what do? You buy out of the money, call and put a lotto tickets, right? And that forces dealers to gamma hedge these things, especially if they're very short dated. And so if we get like 0-day Bitcoin options trading, where you can essentially have 100x plus gearing on your position, you're going to start to see some wacky moves in the price. And so while, yes, a very passive, steady stream of money coming in that might be a bit sticky, might dampen volatility to some extent. But remember that once we have these derivatives on top, those ETF trading flows are going to fling up and down, and you're going to have very big traders having to hedge their positions in the spot markets and in the non sort of like TradFi type derivative markets offshore. So I think the volatility probably increases as we get more different types of people trading highly leveraged derivatives on the back of the Bitcoin ETF.
Arthur Hayes believes that the success of derivatives linked to Bitcoin will heavily influence the outcome. Currently, there is a growing interest in zero-day options. It's clear that the world, particularly in the US, is influenced by various factors. If you have experience trading in different markets like Korea, you may have noticed the impact it has on the retail industry. When engaging in these types of highly leveraged option strategies, it's important to note that volatility tends to increase significantly. This is due to various factors that come into play. Do you purchase out-of-the-money calls and put options as speculative bets, and does that exert pressure? Traders often resort to hedging these assets, particularly when they have a very short expiration date. For instance, if we encounter a Bitcoin option that expires on the same day, options trading allows for significant leverage, giving you the potential to amplify your position by over 100 times. You may begin to observe some unusual fluctuations in the price, and although it is indeed quite a consistent and reliable income that may have some challenges and setbacks. There is a certain level of volatility involved, but it's important to keep in mind the impact of derivatives and ETF trading. Fluctuations in cash flows can be quite volatile, causing significant challenges for traders who need to hedge their positions. I have experience in spot markets and various types of derivative markets, both onshore and offshore. It is likely that the volatility will increase as more individuals engage in trading highly leveraged derivatives linked to the Bitcoin ETF. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.